Moving far too quickly on interest rate hikes. Neil?
All right, John Roberts at the White House. Thank you very much. If you're noticing a difference in this president versus others in terms of market crises, you're right. He has said what other maybe presidents have thought when it came to interest rates going up in the middle of a very dicey economy, or one that they hope to see moving along. But the contrast here between this president and, let's say, Ronald Reagan and the '87 crash is noteworthy. Take a look.
It's a correction that I think is caused by the Federal Reserve. I think the Fed is out of control. I think what they're doing is wrong.
All the other things I've told you about the economy are as solid as I've told you. So, no, I have no more knowledge of why it took place than you have.
All right. That, of course, was Ronald Reagan right after the 1987 stock market crash on October 19th, where he didn't assign much value to one day's move in the market. A few months later, he was proven right. The market was right back to those old-time levels. The read from that and the risk of going after the Federal Reserve, if there is one, let's talk to former White House Press Secretary Ari Fleischer, Market Watch's Larry Shaver, and Catherine Rooney Vera. Catherine, to you on the risk this president is taking, because he is countering his own views said during the 2016 presidential campaign, when he bemoaned that the Federal Reserve was keeping rates artificially low, that it was rigging the economy, rigging the markets, and that they had to get back to an equilibrium. Now we are getting back to that equilibrium, and he doesn't like it. He's president.
Right. That's right, Neil. But I would say one thing. I think this is going to be short term, so the president doesn't have to rail too much against the Federal Reserve. The Fed doesn't have to hike more than 3 times next year, Neil. We saw inflation come out this morning, Neil, and it came below expectations and a deceleration from last month. So I don't see the impetus to go more aggressively than the Fed, by the way, is already discounted into the market pricing. So 3 times next year, I think, is the max. I expect earnings season, which starts tomorrow, Neil, to be phenomenal. 20% year-over-year expansion in earnings is what I'm expecting. And let's face it, economic growth is strong. So I'm taking this, Neil, as an opportunity to buy, and that's what I'm recommending to my clients.
All right. You know, Larry, the economy is strong. There's no doubt about that. And that's why rates are going up. And that's why there's confusion in the marketplace. No matter what the president says, you could argue it's his very stewardship of this strong economy that's both his best friend and right now his worst enemy, right?
Yeah, no, exactly. And let's keep in mind that global growth, we're entering the 8th quarter of consecutive above trend growth. You know, forget about all the noise. I mean, we're still traveling above trend for global growth. And consider this, 3 years ago, 3-month paper was yielding 0. Today it's 227. I think that's what it closed. The S&P 500 dividend yield has gone down. Now it's like it's yielding about 45 basis points less than a 3-month bill. So people are saying, well, maybe they're going to diversify more out of the stock market. But the bottom line is, it's global growth that at the end of the day, you know, trumps everything else, no pun intended. And I think if we continue to wait the next couple of weeks, more GDP numbers around the world come in, we'll see that we continue to running at trend, and it makes sense to be well diversified in an equity portfolio.
You know,
Neil,
sure, go ahead, Kevin. Go ahead. I'm sorry.
Yeah.
Neil, I have to jump in here because it's fascinating to me that the IMF downgraded just yesterday or the day before their global growth forecast under the supposition of an if President Trump executes all his proposed tariffs, then global growth. But they actually downgraded the forecast. Now, this is an entity, along with the Fed, that has historically missed on their growth targets, underestimating the negative impact of high regulation, suffocating regulation, and high taxes under past years and past presidents, and overestimating growth and making the same mistake on the flip side now.
Yeah, and I found a little rich of Christine Lagarde, the managing director of the IMF, to cite the trade situation as a slowdown in global growth when that was well entrenched with higher rates and very frozen economies in the Eurozone. That was a bit rich. But Ari, I did want to talk about the danger you see in speaking what you're thinking. You know, every president probably of Democrat, Republican has bemoaned a Federal Reserve that hikes interest rates because, you know, they don't like it. But this president goes on record as saying, you know, this is a big problem with me, and even volunteers that I'm not going to fire the guy, but I'm not happy, talking about Jerome Powell, the chairman of the Federal Reserve, with what he's doing. What is the danger of that?
I see no danger. You know, Washington is a very institutional, historical, traditional town, and especially the way government runs, and the White House. I was told at the White House there are two issues that we do not comment on, and one was interest rates. It's the purview of the Fed, and the second is the dollar, strong or weak. We just don't talk about it at the White House. Well, and I asked, why not? And I was told, because that's just the way it's always been done. Well, that's not necessarily the right reason to do something. So when President Trump comes along, as he always does, he breaks traditions because he is not bound by them. There is an upside to it. And the upside is he's blunt, he's plain spoken, he's authentic, and he's telling the truth here, I think.
All right, you might be right, but you might be right. But Larry, my worry with that, and I can agree, speak your mind, but the danger is all of a sudden, whatever the Federal Reserve does is going to be looked under the political context, right?
If you're asking me, Congress has always done that to the president.
Larry?
Go ahead, Larry.
Yeah, exactly. Congress has always done that, and the danger right now is that we have a December rate hike already priced in. If we don't get the inflation that is needed, which we're not right now, real policy rates are going to be much higher than what they actually are. So they're going to have a lot of questions, and you can't fight the Fed, and even the president can't fight the Fed.
All right,
so
Catherine, what do you think of that? Is there a danger with putting them on the spot? Because no matter what they do now, they're going to look at, they eased up on hiking because they're afraid, or they went aggressively because they wanted to show they weren't afraid.
Neil, this is a completely independent Fed. What I would say is look at the G20 next month. That's going to be key. The president is meeting with the Chinese premier, and I think that's going to be key for going forward. I bet that China has concessions on trade, and we avoid this full-fledged trade war that everyone's so fearful about.
Yeah, you avoid that. All of a sudden, this gets reversed very, very quickly. Guys, thank you very much. I apologize for the interruptions, all the breaking news. Bottom line here, we had a